me, Sean James from 999 Capital. Thanks again for joining me today in another video in the Silver Show. And today we got a great topic for you. And bouncing from my previous video, where it's telling you about some of the manipulation tactics that's going on in the silver market, I'm going to continue that, but there's still so much more to cover. I know we talked about spoofing and naked shorting in the last one, but there's plenty more ways of how the commodities market is being manipulated. So let's jump right into it. First up, have you heard about the precious metals leasing? Well, leasing as in itself is not bad, but it's what happens when the bullion banks and the central banks get a hold of it. Essentially, a lease is a lot different from a loan. When you lease something out, you get a fixed interest rate, while with loans it's more susceptible to inflation rate hikes and various different instruments that mess it all up. But the way it works is bullion banks, they lease it out to all these businesses who may need it in return. And I'll get into how this can be a problem, but what are some good reasons why you might actually take a lease out? Well, businesses, they might like precious metal leasing because it allows them to keep their cash consumption down, which allows them to have a more robust and healthy looking cash flow statement, making any onlooking investors more willing to invest in their company. And another way they get through this whole precious metal leasing is through bridge leasing. Best way to think about this is through the example of oil refining. So what happens at these oil refineries when they want to remove all the oil impurities? They take a precious metal, preferably silver or palladium, and that detoxifies all the chemicals to give you a better product. But that waste byproduct, it still contains remnants of that precious metal, let's say silver, and that gets used again in the whole process of the refining. And that's how bullion banks get involved too. And what they do, how their business model works, is when someone deposits cash into their bank, it gets converted and transformed into the precious metal bullion. These precious metal bullion, it gets loaned out or leased in expectance for the return of payment, and it gets returned in a timely manner. The problem though is that bullion banks, they do not need to disclose the amount. So I should say that the LBMA is a bullion bank, but they do not need to disclose the amount that they have to loan out. So essentially it's printing fiat all over again. That's really dangerous because it increases the supply. And the law of economics, it states that when you increase the supply of any product, it lowers the price. That's why you see the price reductions in silver. And this is just basic common sense. If you take a large population of workers, if you keep adding more, the prices, their wages, actually go down. That's what results in a lot of income inequalities. Furthermore though, what happens to the bullion banks? They lease out at extremely low interest rates. Some say about 1%. I know I touched that previously in the video. But this incentivizes companies to keep buying more leases, which indefinitely increases the supply. And the next thing I want to talk to you about is the gold carry trade. So what happens? The central banks, they loan out their gold to the bullion banks. And the bullion banks, they take this gold and they invest it into the gold market, the physical gold market. And through that investment, they get some cash back. Through this cash, they are able to issue out more bonds. And then they write down an IOU to the central banks, notifying them that they will get the gold back at interest. What happens then? Those bonds we discussed about just a moment earlier, they get sold, and in return they get some more cash, which then gets reinvested back into the gold market, and they get physical gold in return. They then take this physical gold and give it back to the central bank in a lump sum, with more of it with the interest. And like I said again, a big problem comes with the fact that they don't have to disclose this amount. And James Turk, he's the great trader at Gold Money, and he was saying that he's been analyzing their storage facilities since the year 2000s, and he found that about 18,000 tons of gold are being loaned out right now. That's crazy to think, right? And no one's keeping track of it. So you can see where the problem is coming from. Leads to a greater degree of manipulation. And another way that's being manipulated, like I touched on in my previous video, is through the futures market. And the futures market's really heavily corrupted. The big reason for that, you just got to ask yourself the question, is who's running the show? According to the Commodities Futures Trading Commission, CFTC for short, people in control of that right now are all the big banks. They control all the commercial trading of physical silver and gold. Well, not even physical, just anything related to it. So what happens then? What they've been able to do is place short positions on all of it. And by doing so, they make huge profits by making sure it never leaves that position. Oof, crazy, right? And take a look at this chart right here. You can see that across a combined net total of all the big four banks, they have about $213 million in net short positions. That's incredible to think, right? It's really crazy how it all works, but there's some benefit to that. Because if everyone on the other side of their contracts, if they demanded delivery of the physical silver or physical gold, that would definitely be a big blow to the silver cartels. And lastly, something I want to touch on is Adrian Douglas. He was this famous and I believe Nobel Prize winning trader. And he liked to look at the trends of physical silver and gold. And he found that they had an inverse relationship. When gold goes up, silver goes down. When silver goes up, gold goes down. So it usually worked like that. But through his research, he found that after the Great Recession of 2008, where so much had changed, suddenly both silver and gold were going along the same trend lines. Now that should be a big red flag for anybody, because that's statistically impossible to do. Since over a 7-year period, silver and gold, two metals that act the opposite of each other, they don't just magically become in perfect alignment. It doesn't make any sense. And that's one of the smoking gun evidences of how silver and really all the precious metals are being heavily corrupted and manipulated. Insane to think. But in conclusion, don't lose hope. I know these banks, they seem so corrupt and it's impossible to take them down. It's like a 7-headed beast. But it just takes one blow, one head cut off of this Hydra monster they created, and slowly and surely they will fall. And one of the ways to do that is through demanding delivery. These institutional investors, once they say to the banks, give us our silver that we campaign for in physical format, that would be a big blow. We might not win, might win that battle, but we'll definitely win the war in the long run. So keep stacking, keep buying more silver, and it's just to the moon from there. But I'll take this quick moment to tell you a little bit more about what we're doing at 999 Capital. You see, instead of doing the whole banking system, I know I've talked about that, we changed our business model just a little bit. We're just focusing on the loan side and lending services. So you come to us for a loan, we give you in silver. We do loans up to $20,000 for personal loans, which are line of credit or installments, or even just a cash advance as well. So definitely, if you want to learn more, click the link down below in the description and apply for an application. And we'll see if you can qualify and even if we're the best fit for you. But like always, if you enjoy the content here and you're enthused to see more you're enthused to learn more about silver, definitely hit that subscribe button, give this video a like, and I'll see you in the next video. Till next time.